generate lifetime income for the rest of your life and never pay taxes on it.
There's a lot of money out there in Roth IRAs. How can I use that money to set up a lifetime income that I'll never outlive?
How to use Roth IRAs and annuities to create lifetime tax-free income. I'm going to open this package at the end of the video. What's in the box? Let's get to it. Ready for this?
I got it. Yep.
Okay. What we have here is Hey guys, we're back. What if I told you that you could generate lifetime income for the rest of your life and never pay taxes on it? Today, I'm back with my cousin Drew, co-owner of LTC Tree, and we're here to talk about another really hot topic that's really possible because of these high interest paying lifetime equity index annuities. Drew, how's it going?
Hey, Derek, it's going well. So yes, we have identified that you were sharing some statistics with me before we kind of in the green room before we went on the camera. There's a lot of money out there in Roth IRAs, and there's a lot of possibilities that people can use them for. But one that we're getting a lot of demand recently for is how can I use that money to set up a lifetime income that I'll never outlive? It's a concern a lot of people have.
Yeah, and then a lot of times when you get an income, like in retirement, the tax equation comes to the front, and because people want to minimize their taxes in retirement. But Roth IRAs, what those are, is it's after tax money that you can contribute during your working years. But then when you go to take it out when you're retired, as long as you're 59 and a half and older, you never pay taxes on it. So that's kind of what we're going to dive into today, how to use Roth IRAs and annuities to create lifetime tax-free income. But before we get into there, Drew, I don't even think I didn't mention this to you, but I have a surprise. So I'm going to open this package at the end of the video, Drew. You don't even know what's in there, but there's two boxes that came in like this, and I saw the other one. I already know what it is. I'm going to share it with you in a little bit later.
Okay, that sounds good. So something a little different on the channel. We've done this
exactly
one before. So these companies, a little backstory, they'll send us little bribes to try to push their product, but we don't fall for it. We just unbox it, open it, and check it out. We sell all the companies, which actually makes our job a lot harder because every company has slightly different policies and procedures, and it's on us to be able to understand how to navigate all these for our clients. But not every person has the same product that's the best option for them. And it's the same with these annuities. I just did an example illustration for a lady, and depending on when she takes income, whether it's year 1 through 4, 5 through 8, or 9 years and beyond, there's 3 different plans that are the best for her. So it changes a lot.
It really does. Yeah, that's kind of our secret sauce is objectivity. Our slogan on our website is "We work for you, not the insurance company." And we truly mean that. I mean, we don't care which company you go with. Our main goal is to fight for you and find the best product paying you the most interest in this case, or the lowest premium in the insurance case that's out there. And it's going to change from year to year. We're in our 27th year, and who has the lowest premiums or paying the highest interest rates, that changes almost monthly. They kind of leapfrog each other and try to one up each other.
Yeah, it's a really competitive market. It is.
Yeah, and we have our pulse on the market of these changes. So we know in sophisticated software, so if a better product, higher paying interest pops up, we're on it and we show it to our clients. So first, kind of just to give a summary of what we're talking about today is, Roth IRAs, it's a nice foundation that can be used for retirement income, and it's tax-free. And if you pair, number two is if you pair a Roth IRA with a lifetime annuity, that generates the lifetime income. And then, the third topic is just really more kind of a macro. If you have good health, if you have parents who are 93 and 85, like a gentleman I talked to yesterday, there's a good chance that you're going to live into your 80s or 90s. And so it's just another piece that you can add to your portfolio, that what if I do live a long time? It'd be nice to have this guaranteed income stream on top of Social Security income that you might have coming in that you can go have fun with in retirement. We really want our clients to have fun, go golfing, travel, go out to eat. And this money that's coming in can be used to, of course, have fun with. But if something comes up, such as healthcare expenses. You can use it to pay for that. So, Drew, why don't we dive into the first one? How Tell us about Roth IRAs and how could they be used to generate lifetime income?
Yeah, so a lot of people have Roth IRAs that are not doing a whole lot for them. Maybe they're invested in the market, probably over invested in equities right now. This is a theme that I've been talking about over the last few months. Um, and so what they can do is they can do a transfer into one of these lifetime income annuities. And the cool thing is you don't actually have to turn on income immediately because someone might say, look, I'm 50 years old. I don't want to have any tax burden by turning on an income. No, you can defer 10 years, for instance. And you don't have to pick how many years it is right now either. But essentially, every year that you defer taking that income, you're going to see something like an 8 to 10% growth in the income amount. And so the companies really incentivize the client to defer that income. And, I mean, it makes sense. They get to keep the money invested in the bonds for a longer period of time. But if you have a time horizon of 20 or 30 years and you're willing to wait 10 years, it can be quite profitable.
Yeah. So, one caveat with the Roth IRA is, again, you have to be 59 and a half or greater to or older to take the income tax free. But you also have to it has to have been open at least 5 years. So that's a couple little IRS rules. Obviously, check with your tax pro. But that's kind of the gist of it. 59 and a half or older and had to have been open for 5 years. So if you have a Roth IRA that's just kind of sitting there, you can position it now, even if you're in your late 40s, early 50s, and you can bank that 10% simple, 8% compound return for at least 10 years. And then by the time you're ready for the income, you'll see a much higher number than it would be today.
Another cool feature with the products that are on the market right now is that you can actually, at the time that you take an income, you can make an election to pass the benefits on to your spouse after you die. Now, they're going to give you a lower amount, not by a huge margin, but a little bit lower amount of lifetime income, but it can supersede your life and, continue on into your spouse's life. And with a Roth, it's fully tax free for your spouse as well. So if you've got money sitting in a Roth and you want to protect your life and your spouse's life, this is an interesting way to consider.
Yeah. So I'm going to talk about just kind of the mechanics of actually doing it. So, say you have a Roth IRA, say you're 62 years old, you just want to position in there. What you'll do is called an IRA rollover. So, you'll set up an IRA account with one of these insurance companies that we work with. And then once the account's set up, you'll have an account number. And then you'll simply send transfer form to your current company, giving them permission to release the funds to the insurance company. It's a tax-free move, and once it's the funds are moved over, that's when you start earning the interest. So it's a pretty simple process. And Drew, what's the third fact that we're going to talk about today?
Well, another thing that people should consider is that, there is very little downside. Your principal is fully protected. So you might have a small fee or not, depending on which annuity you go with. But there are absolutely no down moves. Like if you're in the stock market and you've got it in your 401k or your Roth IRA, you can take a big haircut. With this, we're going to have some really happy clients if the market ever takes a dive because they're just going to move laterally right across. So that's another feature. It's just a powerful estate planning strategy that I think people should be given a little bit more credit to. And to our credit, we weren't talking about annuities 2.5 years ago because they weren't that good. They've improved dramatically just recently.
Yeah, exactly. I mean, I sold a fair amount of annuities early 2000s, and then probably 2006. That's when you started hearing about those sketchy mortgages and you know delinquencies and all that. And then 7, 08, that's when it really kind of hit the fan. Um, and then in turn, the Fed funds rate started diving, and it really never recovered. So from 2007 to 2020, I don't think I sold one annuity. And the ones that we did were very just one or two here and there. It wasn't a big part of our business at all. But once that Fed funds rate started moving up and it turned that 10-year treasury, the insurance companies basically gave higher rates and a greater incentive to for people to put their money in annuities. And one thing about annuities is like, it's not something you want to put a ton of money into. We love the stock market. Obviously, if you're watching this, you probably have a pretty good financial advisor. So we're not looking to replace, the money that's been working well for you, but that 10 to 30% of your assets that are sitting in bonds, CDs, money market accounts, brokerage accounts, just, earning, a small, think of this as kind of a bond fund alternative. It gives you that guaranteed lifetime income. A lot of them have the lifetime, it gives you the guaranteed tax-free lifetime income, and a lot of them have the long-term care doubler, and it gives you a shot at earning a little bit higher interest than you could from those bonds if the market goes up. So, in summary, Drew, you want to kind of just bring this to a wrap, and
Yeah.
then we'll see what's in the box.
I want to wrap up with a real world example I'm looking at on my screen here. Now we're
Let's
not going
do
to
it.
mention any company names because things change month to month. But for this gentleman, he is 63 years old. He's putting $200,000 into one of these annuity options. And if he defers just 10 years, he can turn on it's over $32,000 a year in lifetime income. He can also opt to have his wife continue that income after he dies at a slightly lower rate. But the best part is if he needs long-term care, it's going to go to $64,000 tax-free if he used a Roth IRA for up to 5 years. So, he could potentially pull hundreds and hundreds and hundreds of thousands of dollars tax-free, more than a mutual fund, out of it. So I think an example is the best way to kind of wrap this up. If you've got a Roth IRA, you probably need to rebalance it anyway. Take a little portion of it and consider putting it in one of these options and thank us later.
Exactly. Well, Drew, thanks for your time today. People watching, viewers, thanks for your time. Drew, I wanted to share this with you and the viewers. What's in the box? Let's get to it.
Yeah, let's see.
Do you have any guesses, Drew, what this is?
I can't see your screen right now. How big is the box?
It's we got like probably 10 by 8. Okay.
I'm gonna go with some sort of golfing accessory.
Okay. Well, if you could see this.
Let me pull up the camera.
Okay, you bring up the camera. Are you ready for this?
I got it. Yep.
Okay. What we have here is the fall color. It's not a fall color, but I went to Georgia, so we got the Bulldog Red LTC Tree Yetis. So Drew, why do we now have 120 Yetis sitting in our office? What do we do with these?
Yeah, we certainly don't drink coffee out of all of them, although I also have one right here. Yeah, so for our valued clients, we like to send a little tchotchke every once in a while so they don't forget about us. And we've been doing this long enough where our clients may have forgotten about us if it was 20 years ago, so
that's right. Yeah. Yeah. And just show appreciation for our clients. But yeah, I mean, we've partnered with Yeti and we get a pretty good deal, and they etch the LTC Tree logo in them, keep your beverage cold in the summer, hot in the winter. They're excellent. So just a little fun thing we wanted to do today. But either way, we really appreciate you guys watching today. And if you'd like to learn more about how to convert your Roth IRA into a lifetime tax-free income, give us a call. Call us, fill out the form on our website, and we're happy to just chat with you and see if it's a good fit.
All right. Well, Derek, I hate to do this, but I have to run pick up my kids at school. So we'll talk to you next time.
All right. See you guys. Bye. Thanks.